Okay, should we start? Well, good morning, everyone, and thanks for joining us today. Well, if you are with us this morning, chances are that you already have heard about Agentic AI, and maybe you are also in financial services and curious to hear about that intersection between Agentic AI in financial services, which is the topic of today's webinar. We're seeing that after years of fancy presentations and proof of concepts, the space of agentic AI is moving from somewhat poorly executed POCs and into proper enterprise scale. And so at the core of the webinar today, we're going to be sharing 4 examples, 4 real use cases for agentic AI within primarily the banking space. We will then focus on some of the work that banks are doing in that space and how that contributes to productivity and overall efficiency. My research colleague, Gaba, and I designed this webinar to really help us look beyond the hype. And therefore, we'll cover just a little bit of the technical part and a little bit of theory and focus more on real-world implementations and case studies. So my name is Nadav Mordechai. I'm Product and Strategy Director at the digital and AI consultancy Elsewhen. Throughout my 15 years or so in that space, I've been working both in financial services, banks, and investment firms, as well as in the consulting and digital product space. I'm part of the leadership team at Elsewhen, and I look after the product and consulting team. One slide about who we are and what Elsewhen does. So Elsewhen, like I said, is an digital and AI consultancy, and we help organizations become the most effective and productive version of themselves. We have about 200 client engagements, or more than 200 client engagements. Our team is about 150 strong, and we have been operating in that particular space of AI and AI product development for our clients for the last 2 or 3 years. And I start with that point to say we're not approaching this again from a theoretical standpoint, but actually from hands-on experience within the sector and with real product development for our clients. So we've got about 30 or 40 minutes today to talk agentic AI in financial services. And by the end of that time together, we would really love you to leave that conversation with a good understanding of the opportunity that is presented by agentic AI in that space. We'll also uncover how industry-leading financial services are using agentic AI right now. So everything that you'll be seeing this morning is quite recent. That will then leave us with a few practical takeaway recommendations and the opportunities that leadership or leaders in the financial services space can take and bring back to the teams when they discuss agentic implementations. And also, we will touch very briefly on how Elsewhen can help your organization move forward with those opportunities. So like I said, everything that we'll be presenting today is based on a far, far deeper research than what we have time for today. We've only just published our research on agentic AI in the financial services space. It brings together different examples from Revolut, MasterCard, JP Morgan, Citi, Visa, and many other banks. So I think we're covering in total 10 different case studies in that research. And what you'll be seeing today is only a small part of that research and small part of how deep some of those examples go. My colleague Yafa will share that research deck with you, the entire presentation, the entire slide deck, right after the call. And of course, do feel free to reach out to either Gaba or myself if you have any questions, any follow-on questions on that. So when we talk about the sort of path to agentic AI in financial services, I think it's important to start by setting the scene, right? And when I look at the overarching context in financial services, we know that financial services have always been at the sort of forefront of technology adoption, right? From mainframes that are 40 or 50 years old now to mobile services. That sector is a sector that continuously and consistently moves very fast. We see this also taking place again now with rapid GenAI uptake, where GenAI is delivering value in software development, in operations, in customer support, and other areas of the bank. And specifically within that context, we see implementations that drive or sort of enable autonomous multi-step decisioning across different value chains. They enable real-time personalization at scale. And they bring that end-to-end automation where we actually see operational gains being created. And we see that also being reflected in the data, right? So we see about 87% of banks actively deploying AI technologies within their operations. Now, a lot of this has been experimental, but we kind of start moving away from that phase with 94% that are now considering AI to be core to their business operations. And importantly, especially for that conversation today, about 3/4 of financial institutions are planning to implement agentic AI within the next 12 months or so. We see some very bold statements around that and how agentic AI could really drive innovation and productivity. So JP Morgan Chief Analytics Officer is talking about every process is powered by AI agents at the JP Morgan of the future, that bank of the future. We also see statements from the likes of Deutsche. They see about $300 million of savings by switching to the agentic operating model. And we think that's real. And that's what we see with our clients, that's what we see across the industry. And that sits sort of in that context to today's conversation. But I want to double click on that concept of AI agents and maybe explain what we mean by that. In a way, make no assumptions that people on the call are familiar with that concept. So when we talk about AI agents, we talk about sort of tools or specialized agents that are powered by generative AI, so they're powered by LLMs. They also operate autonomously, right? So they can move within their environments and interact with their environments. They do things, but they also collect feedback, right? So they get feedback from those interactions, and they use that feedback to make decisions and achieve certain goals. So in a universe that is composed of multiple agents, each agent would have their own highly specialized goal. And at the whole, they use sophisticated reasoning and iterative planning within them to make those decisions and solve complex and multi-step problems on kind of slightly different level than what many of us are familiar with, right? So if we've all been fairly familiar with or accustomed to using generative tools, so the likes of Gemini, ChatGPT, Copilot, that support our personal productivity, and we treat them as sort of personal AI assistants. When we talk about the org level, we now talk about that shift from personal assistants to automating complex organizational processes. So these are totally different tools, totally different skill set. And that skill set is really creating that shift from employee efficiency and onto an enterprise level productivity. So again, we're moving here from individuals using specific generative AI tools to tools that are available at the business level, at the very core of business processes. And so that's everything that I've prepared in terms of kind of technical background for that and theory. And that sets the scene for us to talk about how some of these agents are behaving and what sort of problems they solve in reality. So with that in mind, I'm going to hand it over back to Gaba, and Gaba's going to take us through some examples.
Thanks, Nadav. Hi, everyone. I think Yafa's seamlessly loaded up the next load of slides. My name's Gabriel. I'm the researcher here at Elsewhen. My background is in delivering multi-method research across a number of different industries, including financial services, but also the media industry and the public sector. I've spent the last few months sort of deep in this research with the goal of answering this question: how is Agentic AI reshaping financial services? And some really interesting and clear patterns have emerged, and that's what I'm going to walk you through today. I'm going to bring you through that. We've identified 4 key areas where Agentic AI is making a real impact. And this sort of sits on a spectrum of back office and IT, all the way to front office and customer-facing applications. And I'm going to take you through each one with a real case study that we've done some research on. So the first area is engineering productivity and delivery acceleration, which sits firmly in that back office and IT end of the spectrum. And what we're talking about here is engineering agents that target legacy modernization. And down a level, that is essentially orchestrated coding agents that can remediate code, accelerate testing QA, ultimately to reduce technical debt. And we're seeing this in the industry already, but kind of the opportunity within financial services, the enormous code bases that exist and the prevalence of legacy systems, we could actually see a cut of run the bank technology spending by 20 to 30% by utilizing these agents. And as I said, this is actually taking place in the industry. So good example of this is Commonwealth Bank in Australia, their Project Coral, which is part of a wider move they're making towards agentic engineering across the bank. But specifically, this is a autonomous multi-agent orchestration system. Really rolls off the tongue, but this is leveraging existing coding agents to automate, to automatically resolve technical debt, patch security issues, and write features, ultimately enhancing their software engineering workflows. And you can see that diagram there, and I'm going to kind of touch on a few interesting things that they're doing in this space throughout. So that first one is they're proactively ingesting and collecting monitoring data from across tools. So here they're collecting data from monitoring tools. I'm not sure of the specifics, but the emphasis here is on proactively. This is happening behind the scenes, perhaps when engineers are sleeping. And I guess in that sense, it's happening without that human. The human doesn't have to start that process. It's proactively doing it. Secondly, they're using this data to create a unified, centralized view of technical debt, which is a really interesting challenge for most banks. Actually having a view of their technical debt is really useful. But also, this also provides a ability to audit the trails. So when these agents or when this agentic system kicks in, we can actually track what's happened back to the monitoring data and where an action has kick-started from. You'll see in the middle of there, the specialized agents. So that they're domain-specific engineering agents. The point here is that if we give agents a more specific task, a smaller scope, generally speaking, the accuracy of those agents goes up. That's really important to maintain sort of trust and accuracy in the system. But also by having more smaller agents, we have a more modular and reusable architecture. So we can actually scale up and scale down the number of agents given the demand taking place. And finally, there's an NCP server. So that's Model Context Protocol. For those who don't sort of understand that, essentially what this MCP server does is grounds the whole system in regulatory standards and compliance context, making sure that any actions taking place across this whole process are compliant with regulation, which is obviously hugely important in financial services. And one last point is that all of this is done with a human or engineer in the loop. So that contribution column on the right-hand side is essentially all about that human confirming whether an action taken by an agent is correct and that they're happy with it. So that's that first opportunity. The second area moves us further into the business around autonomous back office operations. This is obviously quite a broad term, but really what we're talking about here is agents performing business critical functions such as underwriting, compliance, risk, operations, legal, end to end. And the opportunity is that Agentic AI could increase productivity by between 30 and 60% in some of these roles, which obviously have a massive impact on not only cost efficiency, but also the outcomes that some of those roles and those functions could hit. Where's this happening? Wells Fargo is a really strong example of this. They've built a multi-agent system to re-underwrite 15 years of archived loans, essentially automating all the tasks previously carried out by armies of analysts. So they're transforming a process perhaps that would have taken weeks or months to days. And again, there's some really key design principles that they've adopted here that we can touch on. So they're using specialized agents again. These own distinct tasks end to end. If you look at the sort of worker agents in that diagram there, the retrieval agent is going into folders and finding the relevant documents. The extraction agent is actually going into those documents and finding relevant information related to the loan. If you go to the calculation agent, that's actually performing the underwriting itself, calculations, and creating some of the documents. And all of this is carried out and orchestrated by the orchestration agent. So that loads, manages, and scales workers. By workers, we mean agents, to match demand. Secondly, again, underwriters act as the human in the loop. I think you've got a nice visual here of how the underwriter will play the human in the loop through the user interface, but they're reviewing any agent-generated decisions and documents. Finally, agents are built on LangGraph, which is an orchestration framework, and this supports modular, reusable agent architecture. So what we're talking about here is that this process could be replicated relatively easily for a different domain, whether that's operations or risk applied to a different process within the business. So that's autonomous back office operations. Thirdly is intelligent sales enablement. And here we're moving further towards the front office. Here is basically augmenting sales workflows. So whether that's identifying sales opportunities, helping an advisor prep for a meeting, giving customers recommendations, and actually creating the sales material themselves. And as you can see on the slide, augmenting front office revenue work could double the time salespeople sell and increase conversion rates by 30%. That's really compelling sort of evidence for that. And MUFG, specifically their corporate and investment bank, is a good example here. They've developed an agentic system for generating and building draft proposals with the aim of reducing the time spent on basic data collection and formatting draft proposals, with the goal of allowing relationship managers to focus more on added value of solutions. And how this works, so I'll kind of take you through that diagram there of 1, 2, 3. Firstly, they're combining a data lake with past proposals with internal and external data sources. The goal here is to ground the whole agentic system in a really rich, strong knowledge base with which to inform the outputs. The second one there is knowledge search. So they're creating the ability to identify relevant information, products and services to the customer or proposal they're creating. And that's grounded in that graph formatting that you can see there. And finally, the third one is the draft preparation. So, a lot of people here would have used ChatGPT to maybe create a slide deck. This is what we're talking about here. GenAI actually drafting the sales collateral itself. And the output of this, or the outcome, has been a reduction in the perceived workload for proposal creation by 50 to 90%, which is quite interesting to get those kind of tangible results. And finally, the fourth area is agentic search and customer experience. I've got a couple examples here. But what agentic AI for customer experience is really talking about solving some of those clunky, bad experiences that banking and insurance customers receive from the likes of chatbots or AI customer service assistants. And so get you to think about, have you been on the phone to your bank and you're banging your head against a wall because you're talking to a AI customer service bot that has no idea what you're talking about and keeps repeating the same thing? That's the sort of problem that we're solving here. And the opportunity is, research shows agentic AI could increase financial service customer satisfaction by 64% and potentially reduce the operational costs of call centers by 30%. And, if there's any CX or customer service leaders here, there's a double whammy there of not only do we improve customer experience and satisfaction, but we drive down the operational costs. It's a real potential game changer for CX and customer service. Some examples. So Capital One's a really strong one. They've built a multi-agent conversational assistant that guides customers through the car buying process, which is really complex. I've got a little demo here of the actual journey, but the emphasis I want to bring here is that this chatbot might look like a normal chatbot, but actually what it's doing is not just serving information or answering FAQs. It's actually moving the customer through the complex journey of buying a car. So I'll kind of start that demo here. And I'll touch on a few interesting points. So I think the first part is that it's answering specific questions from the customer and allowing the customer to compare vehicles and schedule test drives. So I'll let the chatbot catch up here, but you'll see as the questions go on, it's not just generic questions, it's answering the specific questions that a customer has, maybe around like the specifics of a Subaru. And actually providing it with relevant Subaru vehicles to them. The other thing to mention here is that the system is retrieving this data in real time. So, what is a relevant vehicle to them? What about models, prices, features, and what's actually available in the market? And finally, as I mentioned at the start, the agent is supporting the next step for the customer. So whether that's booking in a test drive with a relevant dealership, or actually getting the initial credit check for the vehicle. That often these chatbots, and you're met with a brick wall where you've got to speak to someone or you've got to go and visit a shop. This helps with that process, that I'm actually progressing through that journey before I have to make the journey to a dealership or whatever it might be. So yeah, definitely an interesting kind of progression on the chatbot journey that we've seen previously. I'm going to move on here. And finally, Revolut. So you've probably all seen and read around the Revolut AI voice assistant recently. So they have developed a AI voice assistant with 11 Labs, a leading sort of frontier AI company. And that this sort of AI voice assistant has some interesting kind of compelling stats around it. It now supports 31 different languages, so it's targeted at the European market. Again, it's not just handling FAQs, it's providing account-specific inquiries, it's resolving disputes, it's actioning chargebacks, so giving out refunds or helping with fraud issues. And this is specifically for 4 million customers that sit within their Metal subscription. So Revolut have tiered subscriptions. I think Metal is one of the top ones. But the key stat here is that they're seeing success rate of calls of 99.7%, which is very, very high. And that's the key stat here. But there's some other interesting bits as you dig down into the case study. We're seeing that they're resolving tickets in 5 minutes, which is 8 times faster than previous agents. Again, it's using live customer data to provide personalized responses. With the languages, obviously with AI, we have 24/7 coverage of all of those languages. You don't have to rely on certain geographies working to provide different languages. And also, interestingly, it has intelligent language detection. So I think there's a story going around of a customer that started a conversation in Portuguese and then actually switches to English mid-call, and the agent adapts accordingly. Which is really interesting. I'd encourage you to go and look at the video of this on Revolut's website. And finally, perhaps most interestingly, Revolut is owning the IP of this. So it's orchestrated the solution itself. It's built the business logic into its processes. It has the data ownership. It kind of built this solution as bespoke from the ground up, but leveraging 11 Labs' technology, their latency, their compliance, their regulatory compliance. So an interesting model there about how they've leveraged, partnered with an AI company to build their own solution, which is something that's replicated across many other examples. So that's me done. That's the 4 areas of AI transformation. As Nadav mentioned, there's a full research deck with some other examples across these 4. It's worth a read. Yafa will send that afterwards. And if anyone has had any questions, feel free to ping me a message, and I'm happy to answer. And with that, Nadav, I'll hand back to you.
Nice. Thanks, Gaba. I think the Revolut example is probably my favorite one. I've been to Money 2020 last year, and this was described as like the future of banking. So this is my personal favorite in here. But I guess the next question to ask is, so what, right? And what to do next, and why aren't all of the banks kind of implementing Agentic AI this very day, right? And so what we see is that there's largely 4 blockers that are stopping financial institutions from moving forward with the agentic efforts. The first one is that generic SaaS is costly, it's complex, and it's poorly adapted to real work. We see a lot of spend that is essentially being wasted. There's a high and growing and very unclear cost of ownership. And banks are still somewhat reluctant, quite rightfully, for that vendor lock-in, right? The other blocker that we see is that many of the AI solutions that are currently being offered off the shelf are disconnected from your data, right? That they are disconnected from proprietary data that then leads to hallucinations, to poor decision-making, to low trust, effectively a system or an environment that is not at all possible within a financial services. Then the third thing is that many of the tools are not really customized to the task at hand. And that leads to low adoption rates, to high upskilling costs, and general poor fit. And we also see that AI projects many of them are designed as piecemeal projects, and they're not transformational. So they would tackle just a small part of the business. They fail to scale. They're very siloed, and they essentially take everything that isn't quite right within some of the organizations and just duplicate it. And so within Elsewhen, we've developed a blueprint for embedding agentic AI into financial services workflows. And I want to talk about some of the steps within that blueprint, right? So when we look at that approach, or everything that isn't quite working today, we've packaged our approach into 3 tiers. And those tiers really enable organizations to map, build, scale, and evolve the services. So the first layer in that is that AI activation. That is the immediate automation and value add implementation where we could start seeing value. We spot AI opportunities and we then deploy very quickly deploy agents to prove and refine value. That creates the momentum essentially for teams to start seeing value very rapidly. We have talked in previous webinars about our framework to realize opportunities and to choose between different opportunities. So we bring that into the conversation, and that's really the first layer. The second layer is when we start talking about AI integration, and that's about infrastructure modernization and that technical debt resolution. Gaba touched on that earlier, talking about how some of the agents are working toward that reducing tech debt across organizations. Here we assess the enterprise readiness. We think about how and what needs to be modernized for scale and what sort of change adaptation is required. And off the back of that, we're now able to build the last and kind of most advanced layer of that blueprint, which is the agentic enterprise. This is where we get to a fully fledged enterprise-wide intelligence through that autonomous system of agents that are working across the business. Not many organizations are currently sitting in that sort of third most advanced layer, but we see more and more of these efforts in the earlier stages, the activation stage and the integration stage, leading towards that fully agentic enterprise. So with that in mind, we're kind of getting to the end of our content for today. We're trying to share content on an ongoing basis. So I want to say, first of all, thank you. And then secondly, open the floor up to questions if we've got any. I could see one question coming from the chat. And is this an investment opportunity? Happy to take this offline. I'm not quite sure what the investment here. Whoever's asked that, happy we can discuss this offline. But really, the core of what we wanted to talk about today is that framework. Any other questions, Gaba? Anything else that you wanted to add?
I don't think so. Can't see any other questions other than that. Maybe hold off for a minute or two if someone's got one.
Fantastic.
There's one there, Nadav.
There's one more question. Gaba, do you want to take that? Or should I take that?
You have a crack. I can chip in maybe.
Okay. So the question is, what's the impact on skills, particularly at the entry level? Industry-wide question, I'm going to say. What we see today is an increasing sort of effort within banks to upskill teams. Like what we see is, again, as a consultancy, it's actually that many of the businesses that we work with having upskilling top of their agenda. And when we discuss future engagements with clients, or when we discuss where our problems are, there is always that curiosity of what could be done together with industry partners, I'm going to say, in order to make sure that teams not adjust the entry level, but also more advanced roles and kind of more higher seniority levels are being continuously upskilled. We see that in engineering, where there's a lot of kind of pairing between external engineers and bank engineers to make sure that they work together, and we leave a bit of a legacy when we leave that project. So I think there is again that kind of evolving lay of the land within that space. Gabriel, I'm not sure if you had anything to add on that.
Yeah, I think I'm not sure if I've seen any data specific to financial services, but I think there was an interesting HBR article this week around AI actually intensifying work rather than removing jobs. So the scope and the roles of jobs and tasks of jobs is intensifying rather than taking away roles. So perhaps for at the entry level, we might see less roles, perhaps, but actually the scope of those entry level roles increases and expands across different domains. Or you might have, we're seeing in our organization, product managers becoming part-time engineers through the use of vibe coding tools or coding agents. So that intensification and broadening of roles could be interesting at the entry level, because ultimately, how do you get the C-level without more entry-level roles? It's kind of a bit of a gap, I guess. I think there's another question as well, Nadav, around, does the FS market need new regulation to help the usage of AI capabilities?
Completely new, I'm probably going to say no. Again, on the same vein of our kind of previous topic, evolving regulation, probably yes. If I think about some key areas where regulators could support financial businesses, we look a lot at kind of data governance and how to manage data in better, more secured, more ethical ways. I also look at sort of resilience and that third-party risk, right? So we look at how organizations are working with external suppliers. I have admittedly not read all of the sort of recent FCA guidance on AI, but we are seeing a lot more in that space. So probably not entirely new regulation, but sort of, again, evolve with the industry. The industry is moving at such a pace. Regulatory guidance often follows that pace, and I think in that case we will have to find out what they come up with based on those evolving use cases.
Yeah, I think it's interesting. I've done some research in some other industries, and I think one of the things coming out of it is that perhaps we're equipped with the sort of compliance regulation that we need at the moment, but it's like actually latching on new elements. Like, for example, with Agentic AI, we need explainability. We need to know why a decision was made with this exact data points, with the business logic, with the regulatory logic. And so that stuff could be latched on to existing regulation, potentially. But yeah, that's what I was going to add. I don't think we've got another question in there. We're coming up to about 40 minutes. So yeah, I think that's probably us wrapping up. As Nadav mentioned, yeah, we'll send the full research after this. And if everyone has any questions for us, feel free to reach out on LinkedIn, or I think there'll be some contact details in that research deck as well. So feel free.
Nice, fantastic. Thanks, everyone. Enjoy it.
Yeah.
Let's go.
Good rest of the day.